Cathie Wood, founder, CEOs, and Chief Investment Officer of ARK Investment Management, isn't a stranger to making bold calls on crypto. She provided another one during a virtual interview with Barron's Senior Managing Editor, Lauren R. Rublin. In the virtual interview, the CEO opened up about her expectations for Bitcoin and what she believed would drive the digital asset there. The first thing was institutional buy-ins into the asset. It is no secret that institutional investors have ramped up their stakes in the digital asset market. Inflows for the year broke the record set in 2020 with 2 months still left to go in the year. Total asset under management for Bitcoin quickly rose and is now sitting at a record high of $56 billion according to the last CoinShares report. This increased momentum, says Wood, is what would drive Bitcoin towards $500,000. Despite the rapid rate of investment among institutional investors, it is still estimated that less than 5% are allocated to Bitcoin. However, the trend is growing among big money and would explain that if institutional investors move into Bitcoin and allocate 5% of their portfolios, then Bitcoin would hit $560,000. The CEO expects this to happen but puts the timeline in 5 years. This means that would sees the price of Bitcoin touching above $500,000 by 2026 given current investment trends. One thing that also backs up the CEO's strong resolve in this prediction is the data recorded on the Bitcoin blockchain. Blockchain technology makes it so that every transaction carried out is public information, and she explained that this data helps to see how money is changing hands in the space. We can tell it's happening because of on-chain analysis, Wood said. Welcome to Savvy Finance. We can't thank you enough for watching our videos and subscribing to our channel. We appreciate you a lot. Please don't forget to hit the like button. Let's listen to Cathie Wood as she shares her views on Bitcoin and Ethereum.
Even at 60,000, many people think Bitcoin is ridiculously priced. So what's behind your target, and what to you is the best case for owning Bitcoin?
Yes, well, I'll start with the second part of the question and then talk about the price target. So we have in Bitcoin the first global, private, rules-based monetary system. So it's taking human beings out of the decision making when it comes to preserving the value of a currency. Now, in this case, because the rule is a quantity instead of a price, what we are seeing is Bitcoin's role first and foremost as a store of value. Digital gold. So Bitcoin is mathematically metered to top out at about 21 million units. We're closing in on 19 million units. And knowing the core Bitcoin developers, or at least some of them, as I do, it will be very hard for any of them to change their minds on that 21 million. So the store of value is very much of play. And so it's taking the place of gold. And you'll notice gold has been reluctant to join the commodities party. And I think it's because there is a share shift away from physical gold to digital gold. But we're also seeing use case for means of exchange. In El Salvador, it is unbelievable to watch what's happening to Bitcoin there. So 1.2 million people in El Salvador out of the 4 million adults have banking accounts. After just 2.5 months or 3 months, 3 million of them have Chivo wallets. Now, they were given $30 by the government, but we're now seeing the remittance market shifting over to Bitcoin. So El Salvadorans whose families have moved to the United States are sending money back into these Chivo wallets because the cost is so much cheaper than Western Union or whatever. It's much cheaper than 8%, 8 to as much as 30% if you're in Nigeria. So that's becoming a means of exchange use case. But the reason we used the $500,000 mark for a target is really only one. Both of what I just described are very big ideas. But if institutional investors move into Bitcoin and allocate 5% of their portfolios to it, now this is hypothetical, then by our estimates, the Bitcoin price would go up by $500,000 from this level. So you could say $560,000. This is beginning to happen, and we can tell it's happening because of on-chain analytics. The Bitcoin blockchain is transparent. Now, it's transparent by IP address, and we can see by address who's moving in. And it does look like strong holders, institutional holders are moving in. Why are they moving in? Because the correlation of returns between and among crypto, especially Bitcoin, and other assets, stocks, bonds, currencies, commodities, the correlation is very low. And so what studies tell us is that if there's a low correlation of returns among returns, then by putting that asset with the low correlation into your asset allocation, you will be raising returns and lowering risk over time. So Cambridge Associates, about, I'm going to say almost 3 years ago, put out a report saying, hey, institutional investors, you may not like Bitcoin, but it is true. The low correlation here is a fact. So at least study this. And I think the last 3 years of study is pushing institutional investors into this market. Just one last comment. What we didn't expect when we did our own study on what this would mean for Bitcoin, we did not expect institutions, namely corporations, to start diversifying their cash into Bitcoin on the balance sheet. And we've seen Tesla, Square, MicroStrategy, Coinbase do this. And that will be another source of demand going forward, especially if FASB changes the accounting rules and shifts away from treatment of Bitcoin as an intangible asset.
Are you as bullish on other cryptocurrencies as you are on Bitcoin?
We have become just as bullish on Ether. We see the DeFi world taking off. DeFi is decentralized finance. Mm-hmm. Taking off on the Ethereum network. We see the NFT market, non-fungible tokens, taking off primarily on the Ethereum network. These are two very exciting markets for us. So yes, we're getting more and more enthusiastic about Ether over time as well.
Do you think that if or when the Fed finally raises interest rates, how do you expect crypto to react?
Well, I think there has been a lot of fear. It was partly behind the correction in May. We had Bitcoin and other cryptos cut by half or more than half, which, by the way, was a very good test for the DeFi system. And I think the reason more and more people are moving towards DeFi to get higher yields on their assets. But so we've had a bit of a test that way. There was a shiver associated with the end of quantitative easing and then ultimately raising. I don't think the Fed is going to do anything very quickly. And I think this has been part of the wall of worry in the stock market as well. And yet the stock market has continued to go up. So you will have corrections for sure if the different cryptos continue to scale as dramatically as they have recently, we will have those fears grip the market from time to time as people simply take profits, because the profits have been enormous in the last year.
What do you think of Cathie Wood $500,000 Bitcoin prediction? Do you think Bitcoin will get to 500,000 in 5 years, or it will get there much sooner? Let's hear your opinion in the comments. Thanks for watching. Until our next video, stay savvy.